Hey traders, Raghee here, and in this free video we're going to talk about recapping the crude oil market that we have been waiting for another opportunity to get long in. And this is definitely a market that I feel in the current environment, this current inflation friendly environment, we want to continue to look for buying opportunities. And you can see the V bottom that we put in along with many other markets with the Powell pivot, shall we call it. Powell put his foot in his mouth today. There's no doubt about it. The equities markets freaked out at his mention of all the things that are good in the economy, which start to reduce expectations for aggressive and soon rate cuts. And this market is very much betting on big time more accommodation, cheaper money, keep a larger balance sheet, cut those rates, keep this market drunk on this liquidity, not just in the US, but in China, in Europe, same kinds of movement in inflation and equities. So markets freaked out. By the way, John Williams, this is his job. He will come in and he is the cleaner. He will come clean up the message from Powell. I believe he's scheduled to speak on Friday. Don't be surprised if the market goes back into a good mood into the weekend. We'll see what happens. In the meanwhile, we had crude oil inventory numbers, and the crude oil market kind of sank pretty steadily most of the day. But the question is, has it moved low enough? And let me give you all some numbers to focus on. One, about $2 to $2.20, or 2.2 points. We are looking for a 2 to 2.2 points move to the downside before we buy into a crude pullback. Now, ideally, the crude pullback gets to this area here around the 34 EMA wave, and that would be a great place to take advantage of what we would consider a retracement or even quote-unquote reversion to the mean. Now, one thing to remember about crude is that we do have the OPEC meeting in June. We do have a lot of political pressure to help drop prices in crude. We are at $63. We just came back from a $66 move. This one big candle on the 26th was because of I believe a tweet from POTUS. And again, the idea is the U.S. is not happy with where crude oil prices are at, but certainly OPEC is. So what we would anticipate is maybe a little bit more weakness until we see that OPEC is going to stay on with the production cuts. They're at that 1.2 million barrel per day. It's interesting to me. One of the things that happens on any kind of pullback is that I get a lot of requests to speak about crude. And so the more requests, and this is a really interesting little indicator that I have, the more requests that I have to speak about crude, I know one of two things are happening. Either we're hitting brand new 52-week highs, or we're selling off. So there's some sort of extreme. So I'm getting requests again because of the sell-off. And when my requests grow to speak and be on television or whatever for the sell-off, I know I'm getting close to potentially a bottom. I kid you not, it works nearly like clockwork. So I need that $2 to $2.20 sell-off. Let's get down to the wave. That dot is actually representing where the 34 EMA on the close would be. I would love a pullback like that. I'd love a blue grab candle, which would be great. Let's price some calls into that weakness in either USO or crude, and let's take the continued ride higher. The cool thing about buying on a pullback is this, gang. If the market does this and then just all it does is go back to where it came, we have the alternative to think about paying ourselves at what I would presume would be resistance. We just need the market to retrace its steps. We pay ourselves, we reduce our position size, realize a gain, move to a break even, and then we see how high is high. That's the way I like to play this game. And let's see if we can get that pullback to get this whole thing started. I'll see you in the next update.